Hi, this is Dan Johnson for Stock Kid, which you can find at stockkid.readsriseparadise.com. And this video is for my YouTube channel, youtube.com/thestockkid. Now, in this video, I'm going to talk about a recent stock that I just added to my watch list. Even though this is up-down, so it's not real money, I take it just as seriously as I would a real money portfolio. And the stock I add to my watch list is EnerNOC. ENOC is the stock ticker. And let's go over here and let me tell you what it does. So there is a lot of energy companies, there are a lot of them that are losing a lot of money because they're providing energy to people who don't need it. Now, what EnerNOC provides is it provides a way for people, for the company, to shut off the energy when people aren't using it, and it saves the money for the company. And because of the technology EnerNOC does, if a certain area suddenly needs a lot more energy, within minutes they can just add more energy to that area, or even to that house that needs it, to prevent any things from happening, like blackouts or things that lose tens of billions of dollars in productivity every year. Now, this also prevents a lot of costs. For example, something that will increase people's energies during the summer. 10% of companies use them, but they're only used about less than 1% of the time. So it's no surprise that all these companies are eager to use EnerNOC services. Now, there are a lot of competitors and a lot of different other solutions, but I think for now this is a good solution to the problem. So, why am I only adding it to my watch list and not the portfolio? Now, the reason is the financials. So let me go through the income statement, the annual income statement. Net income this year, first time they were profitable in the last 5 years, which is really good. They also had a lot more gross profit than they've ever had, more operating income than they've ever had, and that's really, really good. So, yes, for the annual report on this looks pretty good, and it is, but let's go to the quarter-by-quarter report. They had $43 million in net income last quarter, or the quarter before last, quarter 3 of 2010, but this past quarter they had net income of negative $21 million, returning to losing money, and their gross profit went down a ton. For some reason they made a lot less revenue, and they lost money, and I'm hesitant to invest in a stock that has a downward trend like this, so I think it's better to just wait it out. While you may make more money if you invest in the stock and then they have a good quarter, next quarter, I think it's still kind of risky to do that, and I mean, it would just be a big risk, but I definitely think it deserves to be on the watch list. Let me show you some other stats. Let's go to the balance sheet. Have a solid balance sheet. They have $325 million in assets, and their total liabilities are $99 million. I don't count the stock as liabilities, because unless the cap goes way down there, it's not. I don't really consider that as liability. So they have a good balance sheet. So their balance sheet is kind of fluctuates from quarter to quarter. As you can see, their assets are all over the place, but they have increased over the last year, certainly. The reason it went down is because they're paying off debt, but I mean, their liabilities have also increased. Their assets have increased more than their liabilities, but I don't know why they don't just use their cash and pay down all their liabilities. But yeah, I mean, if they just have cash outright, then they might as well pay down their liabilities. But I guess I don't know how much of that money is in cash and short-term investments, and also with the cash flow they have, it makes sense to keep some money in the cash. So I don't know how much is short-term investments at cash again, so I can't really comment too much on that. But they have a good balance sheet. So let's go to annual. This is their cash flow now. Last year it says they had positive cash flow, but I don't buy that because all the positive cash flow in these, when they had positive cash flow in these 2 years, it was pretty much all in issuance of retirement stock, and I don't consider that in positive cash flow, really. I mean, yeah, they're issuing stock, which gives them money, but they're spending money. They're spending the stock to issue it. So I really just don't consider that an asset. Without that, they're losing money here. They're losing money here. So, but last year was the first year they had positive cash flow. It didn't come from these activities. Some at like 3.97% did from finance and cash flow items, but that's different. Most of it came from cash from operating activities. So yes, last year was the first time they had positive free cash flow. Let's go to the quarter by quarter, and their free cash flow is increasing. As you can see, that was only because of all that issuance of stock, which I don't consider as positive cash flow. So their cash flow is doing well, but I mean, the negative net income is really bad. And you know, if it would be one thing if like it had been negative 43 million and then they were negative 21 million, then I might invest some in it. I don't know how much, probably not too much, but I'd probably invest some in it. But with negative net income, I don't think it's a good idea. I think it's better to wait it out to see what quarter 1 of 2011 is. So, but it's certainly a stock to watch, and hopefully this video was informative for you, and you add EnerNOC to your own personal watch list. So check out my website, stockkid.resourceparadise.com, and my YouTube channel, youtube.com/thestockkid. See you there. Bye.